Is day trading profitable, specifically for retail traders? That is a very important question that you have to answer before you put your money on the line and actually risk your resources and your family resources. The answer to that is not simple. It depends on a few factors. Let's talk about what are these factors and how you overcome them so you can actually be a profitable trader just like a lot of other people worldwide, especially in India. Before I start, I want to bring up Mark Douglas. If you don't know Mark Douglas, you should go to our YouTube channel. Look, he's one of the best trading psychologists and trading coaches ever existed on this planet. He really breaks down things to you about yourself, that what's stopping you from being profitable is this and that. What he said is, no man ever reached to excellence in any one art or profession without having passed through the slow and painful process of study and preparation. Remember that. So if he heard about if your friends that he put in a trade and he turned his $800 into $2,000, and yeah, he probably did, but he's not doing that consistently. He did it one time, and then he lost it again, and he lost more, and he lost even more, and sometimes, most of the times, he zeroed that account, especially options trader. If you know what I'm talking about, comment below and let me know if that was you. Look, I admit that was me. I zeroed my account so many times. I lost track. I lost count. So that was me in the beginning. So whatever painful process you're going through right now, it was me as well. Day trading is profitable, but not easy. Day trading is simple, but not easy. Profitable, but not easy. Not easy. Day traders, they end up successful and make a lot of money. They are exception rather than the norm, because just like any other thing in life, it has 90% failure rate. Soccer has 99% people make it from soccer, or at least profit from playing soccer. Tennis, whatever it is, dancing. Everybody goes into anything. Any profession in this world have 90% failure rate, and trading is no different. So it's an exception. Learn as much as you can and trade simulated account first. Invest those $100 into simulated account first. Get a market access, participate, which is the most important thing, and learn how to play that game. After that, you can do whatever you want with your trading, and you can make as much money as you want with your trading. Start small and do not put all your investment account in every trade. In the beginning, I had one particular one mentor explain it to me this way. If you start in a fire, what do? In the beginning, one time I went camping, and everybody had fire, and I could not start the fire years ago. That's because I put all that firewood in one spot, and I was trying to light it up. Even with liquid, it didn't go higher. Fire started, it didn't go at all. Why? Because I put so much into one pile, it was not gonna go on. So I asked the guy, what's your secret? How did you end up putting the fire so easy? He said, start small. Start with the pine needles, then the pine cones, then the little twigs, then the little sticks, and then after that the small little branches, and then after that put the logs, and then put bigger logs. When the fire is so hot, you can literally take a small log, unsplit log, and put it into the fire, and it will still go on fire because the fire is so hot it will consume anything. So start small. Trading is the same thing. Start small, learn the skills, and take it from there. Test out strategies. Let's say we send you that trading plan with 12 different strategies. Test them out. See which one works for you. See which one you're comfortable with. As long as you use predetermined risk. On that particular form, the PDF format, we're going to send it to you. You will have particular parameters you have to fill out. Let's just say you cannot risk more than $500 per trade. It's going to tell you, and it's going to tell you your loss cannot be more than, let's just say, $1 per trade, $1 per share, or $2 per share. Depends on how many shares, of course, you're going in with. So, predetermined risk. Predetermined risk. Do not risk losing all your money in one trade. Do not be that guy. Do not be me. All or none. Double or nothing. Any of this stuff. Diversify even in your trading. And if you're only trading in one stock, just have your risk parameters set to 1%, 2%, 5%. If you can handle 10%, that's fine. But do not put 100% of your account and walk out of the day with a blank account, with a zeroed out account. This is just not going to work. On the right hand side, you're going to see the little piece of little diagram or little picture. It shows you that number one, you have to set your risk reward. Number two, don't go all in. Number three, you have to find a catalyst, a trigger, why you even open that trade from the beginning. Number four, don't follow others, because when you follow others, most likely you're already at the end of the run, not the beginning of the run. Number five is control your emotions. If you're not risking so much, you're going to tolerate the losses. If you put all of your money, just like I've done, your emotions are going to be out of control. You're just all over the place. Number six, cut your losses. If your stop says $1 per share, take that stop. Put it in the hard stop, not a mental stop. And after that, you can, when you move to subjective trading, you can change that. But as a mechanical trader, as a mechanical technical trader, you should do that. Take your losses. Number seven, find your strategy. After you try a few things, you're going to realize which one works for you, which one doesn't work for you, and stick with that strategy that works for you. And of course, login will actually show you what worked for you. Practice paper trading or simulator trading. This way, you're not really risking your own money onto that particular, you're into trading. Number nine, avoid FOMO, fear of missing out. I'm a guilty of it. A lot of people are guilty of it. You hear that something is going to come out and this is it, and everybody's making money, and you don't want to miss out, and you jump in. And of course, you end up losing money. Track your trades. You have to have a log. You have to have a checklist. You have to have a binder. You have to track which one made you money, which one lost. You have to review those trades at the end of the day. You don't have to do that your entire trading career, but in the beginning you have to do that so you actually know what works and what doesn't work. If you don't know what works and what doesn't work, you will never be consistent. It will be always new action, new result, new losses or new wins. So consistency in action results in consistency in profits. Build a watch list. Let's just say you have 10 stocks you trade. Do those 10 stocks and 10 stocks only. Don't go into 100. Don't go into like different markets like crypto and options and commodities and bonds and all kind of stuff. Just trade one thing in the beginning, and after that you're gonna be able to do more than one thing at a time. But in the beginning, develop the muscle and brain memory to just focus on one thing and one thing only. If you're struggling with this, you should listen to the audiobook. It's called The One Thing. They will explain to you how, in the beginning of anything, focusing on more than one thing is going to be actually disastrous. And of course, protect your capital. Protect your capital. Look, without capital, you're nothing. You just, I don't know how to say it, but you're like broke. You're not going to be able to trade. Look, to trade, you have to have money. And if you have no money, you cannot trade. So don't put all your account in one trade, especially options or commodities, and expect that it's going to work out. You have to slice that pie so many times. So if you're wrong, you are not losing your shirt every single trade.
Thank you for watching. Share this with friends and family, and please subscribe.